Hello and welcome to etbfsi.com. My name is Amol Dete and I'm in conversation with Mr. Mohammed Ali from Moody's Investor Service. Mohammed, glad to have you.
Glad to be here. Thank you for having me.
So Mohammed, to begin with, I recently gone through a report that Moody's have launched specifically on the insurance sector, which says that, basically you're seeing the upside for the insurance companies going ahead. You also see the upside on the profitability.
Yeah.
And the ground or the defend that you have put it there in the report is because of the revenue has gone up significantly in last 8 months. My first question is to you, Mohammed, in terms of how do you see the sustainability of this revenue which you have seen in last 8 months? By any chance, do you think it's temporary? If not, why don't you think it temporary and why do you think it's sustainable?
In terms of the sustainability, what we see is that even during COVID times, the demand had increased for health and protections business.
Right.
COVID had the pandemic, had basically encouraged the consumers to raise their awareness, understand what health protection could provide to them and the benefits it could provide. So already during the pandemic, we saw that there was increasing, that was buoying the premium rates. It didn't let it decline. Now post-COVID, as the economy normalized and in fact started to grow. We had growth in fiscal year 21, which is year ended March 22. We had growth of 8.7%. Still we're seeing the Indian economy grow further. 7% is what we expect for fiscal year 22, which is March year end 23. And that along with the still available demand on health protection and expanding economy, expanding per capita incomes, household incomes, disposable income, that will sustain this growth going forward. The way our sovereign team looks at it, we're still projecting continued expansion of the economy.
Right.
So that's one driver. The increasing demand or sustained demand for health protection and other lines of business as the economy diversifies, that will continue to sustain this premium growth.
But considering, I'm sure obviously there is a rise in the premium, but at the same time there is a rise in the claim ratios as well. At the same time there is a rise in the expenses ratio and the marketing of the expenses, which is a major part for the insurance companies as well. So don't you think by any chance that will eat up the profitability, or you're so confident that the profitability will also be ease out going ahead?
Sure. So claims has definitely not normalized post-pandemic. So pre-pandemic, it was at around, for general insurers, the ratio was at around 86%. During the pandemic, it fell just around 80%. Now it's gone back up to 89%.
Right.
So there is claims first normalizing. There's been claims inflation because the underlying, whether that's property, whether that's motor repairs or health is the primary driver. Health services, the inflation has been there. So over there, you've had claims inflation. Now, the reason why we're saying that will largely plateau or stop to increase is because post-pandemic, we're not going to have that many pandemic-related COVID claims.
Right.
So that's one thing. Usually in markets, after claims inflation, we have pricing corrections. Now, pricing corrections have been already being implemented on the reinsurance side. And as that comes from the reinsurance side, we will see those changes in the primary side as well. Whether that's in commercial business or even personal, because even in personal, we've already seen premium rates increase. So because the premium rates are increasing, pricing is increasing, and we're expecting claims to sort of plateau, we're expecting profitability to improve for the following 1 to 3 years.
I have a couple of questions on the industry side and some specific on the budget also, but one more question specifically on the report side, Mohammed, is this, that I'm sure you must have, but give us, maybe more explanation in terms of the external factors which may create a havoc, which is happening in many other sectors. And when I say external factors, inflation, which is very high, interest rates, which is very high, the cost of living, which is going up significantly, and ultimately, it may impact on disposable income. And insurance is still not a hugely penetrated market in India, or people will not look at insurance as a first priority.
Agreed.
So considering all these factors, by any chance, you have any other argument in terms of the growth of the insurance segment?
Sure. Now, we feel that most of these are balancing themselves out. The reason being that yes, inflation is there and that is eating away the consumer's capacity to buy, their disposable income is impacted by that. Yes, there is inflation which is impacting the claims cost, but at the same time what we're seeing is that the demand is still increasing. And the reason why we're seeing demand increasing is actually thanks to, again, the pandemic.
Right.
So a lot of focus is on health, a lot of focus on protection, consumers' awareness around that has increased. When you come to the GI side or the personal side of general insurance, what has happened is that digitalization has helped companies reach out, make products more relevant for the consumers, as well as reach out to consumers in a more in a quicker manner. That has engaged the consumer. So the consumer has linked onto that, and even now post-COVID, they're not changing that habit of theirs. It helps the insurance companies. Yes, there is initial digitalization costs, but going forward, that helps them to create expense efficiencies. So in terms of overall profitability and revenue growth, why we see these external factors not impact is they sort of balance themselves out. And when it comes to interest rates, that is actually a benefit to the insurance companies here.
Right.
Compared to developed markets, what happens in developing markets such as India is that interest rate, the investment income based on interest rates is often used to subsidize any underwriting losses. And if you see on the non-life side over here, the combined ratio is often above 100%. And companies are using their investment income to offset that combined ratio, which is a normal feature because of the large amounts of interest rate, higher rates of interest rate and investment income available.
Noted your point. It's quite meaningful, Mohammed. When we look at the industry now, there is a different air now. Everybody thinks that new players are coming up. Obviously, the players or specifically the companies have increased in large numbers in last 1 decade, specifically on the health side, more on compared to life side. And it's been more than 2 decades now. We recently completed 2 decades of privatization in the insurance industry. But the penetration has not moved a lot. I mean, at least to an extent which we wanted, right? So how do you see the scale up and shape up of insurance business specifically hereafter?
Talking about penetration, again, I know the pandemic was a challenging time for most insurers. But if you see post the pandemic, the penetration has sort of bumped up. So pre-pandemic, India's penetration level, insurance penetration, was at 3.6, 3.7%, so below 4%. Post-pandemic, it's gone up to 4.2, 4.3%. Now again, with premium rates increasing, expansion of health further, and expansion of economic activity, we're expecting that penetration to still continue to go up. So in going forward, yes, penetration, you're absolutely right, is still behind many developed markets like the US or UK or even China, developing markets, but we have seen an increase recently, and we're expecting that that will be sustained, if not further growth, based on the premium rate increases that we're expecting.
I'm sure you must have studied, analyzed many companies. If you want to give any unusual perspective here in terms of why the penetration is not going up to the extent which is growing in, if you compare with the maybe developed countries, is there any particular reason?
So maybe not specifically analyzing any particular company, but what I can say over here is that in terms of penetration, that in India and in most developing countries, because of awareness, lack of awareness of using insurance as a wealth management product, lack of awareness of that, they see it more as a tax on their income. When that perception changes, where insurance becomes a wealth management product, that's when you see a higher take-up of insurance. And in India, that has sort of changed or is changing post the pandemic. Even if we compare to closer markets such as Middle East, even over there, governments, the way they are encouraging more usage of insurance through lack of, they're doing less subsidies. So that is encouraging the consumers over there to use insurance as a wealth management product. And they're making certain lines compulsory. So in India, if more lines of business are made compulsory, or if there's a reduction in subsidies and lower premium rates, that will help the consumer to shift towards using insurance as a wealth management product rather than just a taxable purchase.
Continuing with what you said,
Yeah.
what kind of changes do you also see into the insurance market? Because more companies are hitting the capital market. More importantly, LIC has also entered the capital market,
Sure.
though the share prices are not as good as what they thought of. But how do you see the whole market shaping up now, considering they are hitting the capital market, considering they have more avenues to raise capital now?
Exactly.
Yeah.
So definitely, that's exactly it. So in terms of, we see the benefit of companies listing or hitting the capital market in that, A, it raises their financial flexibility from a credit perspective. There are more avenues to raise capital and the like. But also what it does is it improves their transparency, it improves their governance, because these markets, capital markets are regulated. There are certain requirements, minimum requirements, which they have to meet. That overall enhancement in governance and transparency, from our perspective, improves their overall governance, which improves risk management, and as a result, their overall credit profile in terms of underwriting should improve. That's what we have been seeing even for the state-owned insurers. As the capital injection has come, there's been a focus on underwriting. Same thing we expected with LIC, a further focus on distribution, enhancing distribution and underwriting. And over the years, if we see the trend, the underwriting is improving at the state-owned. That's similarly what we've seen for private, the private sector, where the companies who have either joint ventures with foreign insurers or have hit the capital markets again because of the governance enhancements. The board-driven risk management has improved with lower risk-taking on assets, better underwriting profiles. So, both of which are credit positive for us.
Yeah, absolutely. So with increased cap, specifically with the FDI hitting the capital market, and in general the growth of the insurance with whatever slightly up penetration and the scope that you mentioned in the report, what kind of attraction do you see from foreign investors specifically into the insurance market? I'm sure you must be talking to many of them. How positive they are in investing in India. By any chance, if you're in some middle of the deal, please share.
In terms of foreign interest, now first of all, of course, raising of the FDI was a key move, but also if we compare to what's happening in the global insurance space, so our outlook on the P&C insurance sector is negative globally, and that's because exactly the same reasons, such as in India, there's claims inflation, and that is having pressure on underwriting, as a result on capital as well. And they are in economies predominantly globally where the economies are not expanding, they're not growing. That situation is completely the opposite in India.
Absolutely.
So as a result, over here, the investors that are looking at the insurance markets, for them, growing markets such as India are key to tap into, to invest in the insurance sphere. And we see that here, we see that also in the Middle East, again, where economies are growing. So we see that that's quite positive for the companies here, because they'll have, again, additional external FDI coming in. That itself also raises further enhancements in risk management, because you get external know-how. There's certain knowledge sharing that can happen in terms of best practices, and that can enhance distribution as well as underwriting.
Right. So one question maybe in two parts. One obviously on the investment, and second is the emerging business models, and that is insurtech. So a lot of insurtech companies are operating in India right now. Few of them are actually giving a tough competition to traditional companies in terms of the number of customers they are serving. Right. So one, how do you see the rise and the growth and maybe a sustainability of insurtech companies in India? And when you say investments, are the foreign investors maybe not through listed entities because they're not one, but maybe are they looking at them as a startup and investing in it? Or how the foreign flow do you see in the insurtech business?
So the first part in terms of the impact of insurtechs on the industry as well as maybe on traditional insurers. At the baseline, what I can say is that insurtech is helping the sector's awareness increase. So the consumer awareness is increasing. Then that leaves space for either the insurtechs or the traditional insurers to enhance their operations to tap into that increased awareness. So overall for the sector, it's a positive. How individual companies utilize that and up their digitalization to tap into that, that is up to the individual companies. Overall, the sector benefits. In terms of investments into these insurtechs, again, because of the revenue growth that is there, our expectation is that companies that are able to prove that they're able to take advantage of that increased awareness and revenue growth will always have investor interest from external. How that translates into actual transactions happening, that is always down to specific insurtechs and insurers. We don't have a view on that, but overall it is positive.
Okay. But do you see, considering, insurtech is also a flavor of the season, not only in India, but many other countries,
yes,
and,
for sure.
And Lemonade,
yes,
again got listed
exactly.
on UK, one of the top company, you must say in the Europe, right?
Yeah.
And there are many others in Hong Kong and Asian markets as well. So do you see even the scope of insurtech companies in India also at that level going ahead?
The disruption that these companies have caused is because they bring a distribution model, ease of access to insurance products for the consumers, taking advantage of their awareness, increasing awareness. If you apply that same concept to India, and that's why they've been successful in those other markets, because their awareness was already there, so they tapped into that very easily. Over here, the awareness is increasing. It's not there at the same level. The demand is not there at the same level what you see in Europe or developed markets, but it is increasing. So yes, there is scope for them to come in and sort of disrupt the market. But at the end, overall for the sector, it is positive because increasing awareness is positive.
Yeah. You partly mentioned, but if you want to add more in terms of any way that the insurance companies maybe can improve themselves better, specifically on the underwriting, on the distribution side, because that will add a lot on their profitability and the future of their business if they see a greater signs of improvement in these two domains, right?
Sure, exactly. So, like you said, it's for them to digitalize and reach a consumer base that previously maybe they didn't have access through, or it was all traditional methods. Now, post the pandemic, everyone has become used to using digital means, whether it's payments, whether that's banking. There's no reason why insurance should lag. And these insurance companies will need to come up to pace to upgrade their offerings. Often what we've seen insurers who are most successful is they're not offering just insurance products, they're offering lifestyle and well-being products or well-being enhancements on their portals as well, which gets the consumer hooked on and become loyal to that portal as a result to the insurance company as well. And again, of course, that requires large investment, and those largely we've seen either medium to small companies who have partnered with external providers or have in-house built up that capability.
No, sure. They have made a difference with the small ticket products on the digital side. Otherwise, you would not have believed the cycle insurance or a backpack insurance would have been possible. Right? I think that's really interesting. I hope that shapes up really well. Last, just two questions. Sure, I'm sure you must have gone through in the insurance bill amendments, the projections from the government side. They are obviously in the pipeline. What is your view on it? Because they have suggested many changes, obviously, to scale up the insurance industry as such, not only from working capital side, but also some changes on the distribution side. So any view there in terms of these prospects or amendments which the government is projecting?
Sure. I think IRDAI and the government, they have very clear focus on increasing insurance penetration and insurance as a take-up. They have targets that have been set to them, and the regulations that they're bringing are all in line with that, in tune with that, to increase to hit those targets. It's probably not at the pace that they were expecting. The pandemic has thrown some things off, benefited other things like digitalization, but they still seem to be on track with the growth that we've seen thus far. Some things that did excite us was that there have been recent talks about the composite license. Again, that for us is something that will improve not only the top line revenue, but also the distribution of aid distribution for the insurers, where they'll be able to cross-sell. In product risk, for us, that will diversify their product risk. However, what remains to be seen is the sophistication of the underwriting and whether that is priced properly to make it a profitable diversification. There will be, from that revenue growth, there will be an impact on capital, where there will be pressures on capital. How that is managed, if it is profitable business, good risk management, that will automatically convert to organic over time, but inorganic transactions might happen. One sort of semi-natural way that we see this happening is through M&A. So non-life and life insurers merging, that gives them automatic synergies on expenses, distribution, customer base, underwriting, reserving, and additional capital. So those things might benefit the market. Of course, there will be challenges because those companies that are by themselves looking to expand into from life to non-life or from non-life to life, they will bring in added competition on pricing. So that will initially cause some volatility, but how the market transitions from that depends on the risk management, which should improve if there's additional capital coming in externally.
Give me more sense on the outlook on what you said specifically about the insurance bill, the projected changes. Let's hope at least few of the changes will happen. At least the basics one, right? Maybe 100 crore capital and something like that, which will give a liberty to a lot of companies to enter. There are a lot of talks about M&As also. Considering all these developments and your own report that the revenue and the profitability will go up, how do you see the whole insurance market of India compared to the world maybe in next 4 to 5 years?
Given that similar to the remaining sectors and overall in India, because it's expanding and the rest of the world is sort of there's lower growth, of course India will remain focused, and then investors into insurance are looking at this market and they're excited by what they see, and these changes, amendments, bills allow them different avenues to take benefit from that revenue growth. The only caveat that we have is that the underwriting profitability, the underwriting focus of these insurers should improve. A lot of that is linked to, and the reason why we're positive about it is it's either linked to reinsurance pricing, and reinsurance pricing has gone up, so we expect those changes to trickle down. And what's happening in the state-owned insurers. Again, state-owned insurers, their underwriting profitability is improving, there is a wider focus. So given both these aspects, we expect profitability to go up. And with the government in its bill facilitating better investment opportunities and avenues for investors to come in, that will excite investors to enter the market.
Quite meaningful. Thanks for that note. I think just let me wrap up with the budget expectations, because it's just hardly 2 weeks away, and we all have a lot of expectations from the budget. So anything specifically that you expect from the finance minister to deliver specifically for the insurance sector in the coming budget?
I mean, we're not, we don't actually expect any, but one thing that, couple of things that we will be watching out for is if there's any amendments to taxes, GST, health insurance changes, expansion of that, if there are any changes on protections and life, and of course any changes in terms of the bill and announcements around that. For us, generally, the budget is an important point in time because it starts the ball rolling for what's going to happen next. So far, and that's been shown in the figures, we are seeing that penetration increase, whether that was from bringing in of the health, and what remains to be seen is what the market is asking for, such as the tax cuts. If those do come through, then of course that will aid consumers' propensity towards buying insurance products. So let's see what happens.
Yeah, sure. And let's hope for the best. Let's hope Finance Minister listens to you and the industry.
We're not allowed to give any
I'm sure.
suggestions, but these are things that we'll be watching out.
Yeah. And also let's hope, as you mentioned in your report, the profitability and sustainability and for the insurance sector, stay longer.
Yeah.
So thank you so much, Mohammed, for sharing your perspective and insights. Thank you so much.
Thank you for having me. It was a pleasure.
Thank you. And thank you so much for watching.